I'm very glad to see gold making new highs, and and also some of the mainstream media articles are almost humorous to me, like we didn't expect this, or how come it's happening, or why is this taking place, and uh, no reason to this, and on it goes, and it's simply buying pressure. I mean, there's been so much buying pressure from the central banks, and as I said, if you're unwilling to sell, any new buying pressure will push the price higher. So there's gold. I'm glad it's leading. Probably needs to take a breather here. My forecast in January was we'd see at least a 13% move in gold based on a 13% for 2024, based on the 13% we saw in 2023.
Last week, gold prices surged to unprecedented heights following Powell's announcement that the U.S. central bank is still poised to decrease rates by 0.75 of a percentage point before the close of 2024. DavidMorgan is a prominent figure in the precious metals sector, renowned for his expertise as a financial analyst. In this video, DavidMorgan shows optimism about gold's future, emphasizing its recent surge and potential for further gains. Amidst bullish excitement, David projects a solid 13% uptick for the precious metal in 2024. Between January 1971 and March 2024, gold had an average annual return of 7.98%, which was only slightly behind the return of commodities, with an annual average of 8%. The annual average return of gold in 2023 was 13.1%. Establishing higher lows and higher highs before reaching new record highs last week, the long-term trend is clearly bullish. A deviation from this sequence would signal a shift to a bearish outlook. David acknowledges frustration with silver's recent performance compared to gold, but remains confident in its fundamentals. Pointing to silver's potential resurgence, he emphasizes its appeal as a cost-effective alternative to gold and its alignment with the green movement. Industrial demand for silver, particularly from the expanding green energy sector, is anticipated to drive global demand growth. According to a 2022 study by scientists at the University of New South Wales, solar manufacturers could consume over 20% of the current annual silver supply by 2027, with estimates suggesting that by 2050, solar panel production could utilize up to 85 to 98% of the current global silver reserves. Even if the economy crashes, government commitment to green energy will likely keep the money in that sector. The Silver Institute projects another market deficit in 2024, with demand outstripping supply. This would mark the fourth straight year of a structural market deficit and further cut into silver reserves. Expanding his perspective, David delves into his bullish outlook on platinum. Drawing attention to its rarity compared to gold, he sees an opportunity for savvy investors to capitalize on its potential revaluation. Now we present the clips of DavidMorgan's insights from his recent interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Yeah, there's not a lot to comment on. I mean, it speaks for itself. The new high, of course, is really great for gold. And whenever you get a new high in a commodity or even a stock, I mean, it'll go higher and higher. I've explained many times about upward resistance, and but it is a new high that's very bullish because everyone says, well, how high is it going to go? So there's not much selling pressure, or any new buying pressure pushes it higher. But at some point, there's what's called a consolidation, or we call it back and filling. These are slang terms that mean that it hits a certain level and then it may fall off and rebuild a base and then move higher. And there's all kinds of charting patterns. You can look at a bull flag, a flagpole. I mean, there's all these terms, and a lot of them have high probabilities, but nothing's guaranteed. So having said all that, I'm very glad to see gold making new highs, and and also some of the mainstream media articles are almost humorous to me, like we didn't expect this, or it's simply buying pressure. I mean, there's been so much buying pressure from the central banks, and as I said, if you're unwilling to sell, any new buying pressure will push the price higher. So there's gold. I'm glad it's leading. Probably needs to take a breather here. My forecast in January was we'd see at least a 13% move in gold, based on a 13% for 2024, based on the 13% we saw in 2023. And that, came in around 2,000-ish. So 10% is 200. So, 10% is already and we're not in the season, really, the seasonality for gold that's the strongest. We'll move into that shortly, and then we're going to go into the summer doldrums, which usually is weak for the metals, but there are times it's not always. It's just a probability. As far as silver is concerned, again, I'll use the word I used last time, frustrating. I mean, it's not keeping up with gold. And last week, it actually outperformed in a weekly basis. I know that's a very small data point, Elijah, but gold was up, I think, 6% or 5%, and silver was up like 13%. But here we are, several percent in one day. But it will, I still think, and not because of my bias towards silver, which I have, but the dynamics of silver are still so fundamentally strong. And there's so much push for this green movement. And then it's the poor man's gold. And I don't mind using that term because if gold gets at a certain level, there'll be people that want to get into precious metals and they'll look at their just savings account and they'll say, I really want to buy gold. I mean, a lot of them make the statement or the thought process. I want to buy gold. Gold's at 3,000 an ounce now. Silver's only at $30 an ounce. You know what? I'm going to buy silver. I'm going to get a lot more for my money. And that's sort of the penny stock game too. I mean, there's a lot of people that are not very sophisticated in the stock market, and really they'd be a lot better off with like one share of, pick IBM or something, rather than 100,000 shares of XYZ mining at 0.01 cent per share. So silver, you could put it in the same bed. Those are not a real good analogy, but you get my point that there's a certain trade-off as far as cost goes with the precious metals. And another one, and I'm in it, and I'm very biased now because I have a pretty good position. That's in the platinum market. I mean, platinum really hasn't participated in this move very much, but it's 15 times scarcer than gold, and it's half the price. So if it just gets par with gold, which it may not, but if it did, I mean, you'd be buying gold at half price. Something that if you're very sophisticated and willing to take added risk, you might look at.
DavidMorgan foresees a temporary dip in silver and gold prices during the summer months, referred to as the silver and gold doldrums, but remains optimistic. In his analysis, David anticipates ongoing geopolitical tensions and economic factors, including government borrowing and inflation, will sustain demand for precious metals as a hedge against currency devaluation. Looking to 2024, Gold Demand Trends predicts that total investment, including OTC, is likely to be higher in 2024, but akin to the market behavior last year. Much of this demand could come from the less visible OTC segment, adding uncertainty. Moreover, David recognizes a possible monetary system reset, but questions a total dollar collapse. He proposes significant devaluation before a transition, possibly to gold-backed digital currencies. Let's get back to the interview.
Yeah, I see it higher, higher, and higher. So let me say it higher, lower, higher, meaning we probably will see the silver and gold doldrums in the summertime, where there's not much interest in the metals markets. Again, that's a probability. It's a high probability, not guaranteed, but there's so much going on. It's status quo. If nothing changes from where it is now, you're borrowing $1 trillion at the clip that the U.S. is borrowing at. The war situation's no better or no worse. The geopolitical infighting between people that are coming to the fore that are populist versus people that are more authoritarian. I mean, everything that's as it is now doesn't change. It just remains the same. You're going to see higher prices. There's just too much going on in these markets that give people the uncertainty of what is their currency going to be worth in the future. And especially if you go into the third world where you look at, Vietnam Vietnam is not a really good example as far as population size, but they are looking at food prices that are going up at such a large clip that they do spend basically whatever they make, that week. I mean, it's pushing toward a hyperinflationary environment. And that's not just Vietnam. There are other smaller countries in the world that have faced that problem. So in those countries, they don't know the difference between the silver market and the silver retail market. They don't care. All they care about is that's a way to protect themselves. And so they may pay a high premium and not worry about it too much because in their currency, it's going to be higher no matter what. And that's kind of the situation that we as precious metals investors have to our advantage. Not that I'm pro-inflation. I'm dead set against inflation. But the idea is that this time it'll be a global market. So it'll be more than just a United States inflation problem. It'll be a global problem. And is inflation under control? Well, of course, the Fed's going to say it is. But in reality, it isn't. And that's why they keep delaying these interest rate cuts. And once the interest rate cuts take place, the signal to those that understand how money works, how the global cash flows operate, and what the U.S. is really signaling, they're throwing in the white towel and they're saying, we're done. We are going to cut interest rates and we don't care what happens to the dollar anymore. And that's a cue for it to be inflated away into a hyperinflationary environment. Will that happen? Absolutely not. Or I'll say absolutely not. I'll be that bold because there'll be a new system right around the corner. So when these currencies fail, they fail, but then they reset and restart. And they have it usually gold-backed. I don't think they'll attempt a gold-backed digital currency initially. I think they'll try just to push over the system into a new realm where you exchange old for new and there's no cash and you go into a computer form or digital form only, and you got to get verified that you're you, and who knows what's going to go on. It's been cited by many people other than myself, but it'll probably be more Orwellian than you care to imagine. So the dollar won't be worth zero. It'll be worth, 0.07 cents. Who knows what it'll get to, but it will be an excuse for it to be a new system. And that's what
many experts anticipate a rise in gold prices this year. So buying gold now could lead to higher returns. Despite acknowledging the seasonality of gold and the potential for a temporary pullback during the summer months, DavidMorgan remains optimistic about its long-term prospects. As global economic conditions continue to fluctuate, how do you foresee the role of precious metals evolving in the years ahead? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.